Now, we have come to the end of the third day of the AFDB's annual meetings here in Nairobi, Kenya, and of course the delegates are beginning to depart to their various hotels and locations. It's been a very busy Wednesday with the opening formalities starting 9 a.m. Actually a 5-hour event, which included the opening formalities with at least 6 African presidents, 1 or 2 vice presidents, the Prime Minister of Namibia, among other top dignitaries attending the opening formalities. Then, of course, you've got 2 presidential panels which were held earlier today. Then, of course, you've got the President Akume Adesina, the head of the AFDB, speaking to the flagging off of the 68th anniversary of the DFI. Then, of course, you've got the presidential dance. Maybe you see a bit of that on the report. But again, it's been a very eventful day because those opening ceremonies brought out some of the key issues that African leaders should pay very critical attention.
Despite this progress, the core components of human development, including income levels and formal employment, remain low and vulnerable to shocks. This leads me to the key question that the region and its governments need to tackle in the coming years. What will it take to ensure that this higher growth is sustainable and inclusive? To foster and sustain development gains, economic growth alone is insufficient. African countries need to deepen their structural transformation to ensure a prosperous and secure future for all Africans. The priority will be on transforming natural resource-driven economies into knowledge-driven ones, while taking advantage of the region's demographic dividend.
Part of the opening sequence of today's event had to do with the call for the African Union itself to be reformed as an institution that should provide leadership, provide guidance, and support Africa's financial market integration. All of that was part of what the host president, William Ruto, delivered today.
As I take over the assignment from President Kagame, let me make 4 points on that reform. Number 1, we will be proposing that the Africa Union Commission, the executive, be given sufficient power to be able to prosecute Africa's economic diplomacy, so that we can unlock the potential of our continent, so that we can showcase the assets that we have, our mineral assets, our agricultural development assets, our human capital assets, our natural resources assets, and use them to create investment opportunities so that we turn our potential into opportunity and opportunity into investment and create a better Africa for all of us. Number 2, to make Africa Union a fit-for-purpose organization to take charge of the consolidation of the African market through the Africa Continental Free Trade Area. Today, in Africa, intra-Africa trade is only 15%. Intra-Asian trade is 60%. Intra-European trade is 70%. Intra-Africa trade is 15%. We are struggling looking for markets everywhere except in our continent. We must believe in ourselves. We must first sell to the market that we have in our continent. It is the silver bullet, and it is what is going to increase the contribution of trade from Africa from 2% to the next level. Number 3, we must make Africa Union fit for purpose to secure this continent. The Africa Union must take charge of our peace, security, and stability. The Africa Union must make us solve the problems of conflict and war in our continent. We cannot progress as a continent if there is war in Sudan, there is trouble in Somalia, there is problems in DRC, there is problems in the Sahel. We must take charge of our security. We must take charge of our stability, and African Union must step forward to be counted to provide that cover.
Now, outside the opening formalities, we've got a few more knowledge sessions that are focused on a few other areas. Cost of transactions for Africa, for example, the cost of borrowing from the international financial markets, liquidity in the FX, exchange rate, inflation, hedging against fluctuations in global rates. All of these were part of panel discussions that will help Africa find the necessary funding and at the right costs to support its economic transformation agenda.
Credit lines, as well as, by the way, our risk-sharing facilities, because similar to what Max mentioned, we have these programs where we actually share risk on a portfolio basis, share the portfolio risk with banks on the underlying portfolio. So we take SME risk, agribusiness risk, many different sectors to encourage banks to lend more. But whether we give a credit line or we do these programs, we do monitor rates, but we do not prescribe generally. Because we found generally that prescribing rates will not help in actually providing more credit to underserved sectors. Ultimately, we believe in competition, so creating offer and creating ideally, an SME or agri or young entrepreneur, whatever, would have different institutions, different banks to choose from, or even non-bank financial institutions that we sometimes invest in, microfinance institutions, etc. So that the more choice you have, the better the rate will be, hopefully. But I think it's a very valid question, because we obviously do observe that cost of credit in many sectors is still very high, and it is definitely an issue that we would completely recognize. But maybe there's other things we can do. Would love to hear also your suggestion. In terms of the other question, just very briefly on money markets. So we're happy to take it offline. It's really a large ecosystem. We work with partners. We work with other DFIs. We work with World Bank, IMF, Frontclear, and others, and local partners, central banks. But it's really about creating, an ecosystem, the legal framework, benchmarks, interbank markets, etc. But we also support it as practitioners by lending against floating rate benchmarks, and sometimes discussing with our clients whether it's not more prudent to take floating rate loans rather than fixed rate loans, etc. But happy to discuss more offline. It's a bit of a novel area, generally, I think, for most MDBs to engage more in money markets, because we are traditionally more focused on the long-term financing.
Yes, to begin to summarize today's events, here are the EFDB's annual meetings. Part of the sessions we were able to cover, as far as after the long opening formalities was concerned, had to do with replenishing the ADF. If you get President Ruto speaking, that about $25 billion should be the new level for that particular fund. The Board of Governors first sitting was also done today at the main auditorium just behind me here at the KICC Center. And then, of course, you've got FinTech beyond payments. But, of course, at the end of it all comes down to what goes on your dinner table, and that's the session on getting the right financing options for Africa's agriculture sector.
Talking about impact, for me, it's the most important variable that an organization should have when they are structuring deals for smallholder farmers. Because if you focus on impact, then profitability follows afterwards. If your focus is on profitability, chances are such that the model won't work. So how can we ensure that the purpose is impact, of course, sustainable models, and then profitability follows?
As we begin to count down to the end of the annual meetings of the EFDB, we look forward to the presentation of the latest economic outlook reports by the institution that will provide a guide as to what the economic performance of the various countries and regions within the continent really looks like in the current year as well as the year to come. That report is expected to be presented by the chief economist of the EFDB here at the venue on Thursday. I am Bosin Amofaye for Arise News Channel.